Let's take a look at the reasons why traders fail. As we have explained before in the previous lessons, emotional discipline is the most important component to being a successful trader. So you have to learn to develop the ability to patiently wait for a tradable situation to develop, then you execute your trade. Otherwise, if there's no setup, there's no trade. But of course, it's not as simple as it sounds. Lack of emotional discipline is the number one reason why traders fail. Some traders tend to force trades even when the odds are not in their favor, which is a strategy to disaster. On the other hand, others have difficulty pulling the trigger when a good trade presents itself, which of course is triggered also by fear. You need to have confidence in your own setups. Some traders hold to trades way too long, especially the ones that are in losses, and then when they see profits, they actually close way too early as well. So they end up having losses that are larger than their wins, and basically that is just another way to blow your account. When it comes to trading Forex, knowledge is not the problem for most people. Everyone knows what to look for. The critical factor is the emotional discipline. You have to do the right thing consistently. Consistency is key, as we have said before. When you find a setup to trade, you shouldn't be overwhelmed with the feelings of hope, fear, as well as greed. You need to overcome all those emotional feelings when you see your setup. The feeling you want to cultivate in trading is simply self-confidence as well as self-control. When you're starting off, you need to trade small. As you gain more experience, your confidence also grows as well. But be careful, because most traders, after wins in a row, they get too greedy and take on too much risk and end up just losing it all. The market is a merciless teacher. You need to understand that there's no mercy in the markets, right? The markets don't really care about you. So you have to have self-discipline. Now let's talk about another factor that leads to a lot of failing in trading, and that is greed, as we have talked about it before in the previous phase 1 as well. So the object is to make money, but to make money you have to focus on finding good trades and executing according to your trading rules, right? Not based on your emotions. If you focus too much on the money, you will lose sight of the trading process that generates the long-term success, and that is what you want. You want a long-term success in this game, right? It's not just, you make money today and tomorrow you don't make money, right? You need consistency in these markets. That is the only way you can survive as a profitable trader. Now, greed is the one thing that leads most traders to take too much risk, trade against their own strategy, and hold on to losing trades because they just have too much greed. They want too much out of the market. Maybe you enter a setup that is supposed to give you 10 pips, but you want to get 15, 20 pips out of the same setup, right? So it's just because of greed, and you end up losing your trade, including those floating profits that you were in. One of the things that leads to this is that traders start making plans with Forex money, which is basically setting themselves up for problems, right? For big problems. Remember, you can only trade what the market gives you. We don't tell the market what to do. We only do what the market gives us, right? What the market tells us. There will be periods with many opportunities, and there will be periods where there are few chances to make the money out of the market. Focus on the market. But with that being said, doesn't mean that you have to force trades. You just have to wait for that perfect opportunity, right? That perfect setup for you to enter your trades. You also need to focus on the market. Focus on your setups and the rules, right? Follow the rules that you are being taught in this course, and this will eventually lead you to being a profitable trader. So focus on those things and the money will take care of itself. Moving on, let's talk about fear once again. So it's very difficult to trade when you are anxious and nervous. Not only is this an uncomfortable feeling, it actually worsens performance when it comes to trading. A fearful trader will obviously anticipate failure. It is difficult to objectively interpret the market activity and following your trading rules when you're anxious or you got fear within. You will have trouble assessing opportunities and pulling the trigger when the setups are quite clear on the charts. And here are some of those feelings that hold back traders. Number one is the fear of losing money, which is the biggest fear. And then secondly, we have the fear of failure. Just feeling like you're not going to win, you're just going to fail. And then we also have the fear of undercapitalization. The fourth fear being the lack of confidence in yourself. And then the last but not least, the lack of confidence in trades that you take. These are the most common fears that traders face on a daily basis. So it is important to acknowledge that trading is not easy. No one can focus where the market will go. We all predicting, and that's why there will be wins and losses. In the next lesson, we're going to touch more on impatience, because it's another very important aspect that you need to understand and master when it comes to being a profitable trader. So let's get straight into that lesson.